What's up, traders? Matt from the Trade Brigade here with a quick check-in on the crypto markets. Of course, we missed last Friday's video, so here it goes. We will be doing a technical analysis on the coins that you see listed up above here on the watch list. Of course, Bitcoin daily time frame is kicking us off, and what is the price action and structure suggesting here? Certainly the possibility for a double top. We know that the neckline would, of course, be this low breaking, so the double top would look something like this. Break of the neckline confirms the down leg, and the target would be the bottom end of this prior balance. And conveniently enough, the neckline is also the top end of the structure. So on the weekly time frame, this might look like a look above and fail, which also makes sense to be targeting the bottom end of the range here. So numbers, let me give you the numbers. It's going to be $21,500 per coin. We're going to round that off there on the top level, the neckline level. And the target, if this breakdown were to come, would be down around $18,600 per coin. Now, based on the structure that we're currently putting in, it doesn't appear likely that we're just going to fall out of the sky and do something like this over the next couple of days, so do be mindful of that. The reason I bring up the bearish outcome first is because I want us to remember on the weekly time frame here that we still have not even neutralized the weekly downtrend, right? We clearly have a high, lower high, lower high, lower high. This could really be a lower high anywhere until we make the equal high much closer to $31,300 per coin, which obviously would require a lot more work to be done before this weekly trend neutralizes. I'm not saying it's not a possibility here, but again, it is worth bearing in mind that we are still in a very, very aggressive weekly downtrend here. All right, back to the daily time frame. Let's just acknowledge now the flip side of the coin, which, as I'm sure you could tell, is acknowledging the uptrend, right? We actually have a set of lows, higher lows, higher lows, higher lows. And this, so we had a high, relatively equal high. This was confirmed as a new higher high, thus starting a new daily uptrend. I will always give credit where credit is due. And this technically did make a new high as well above this level, but you'll notice there's no daily bar close over that $23,850 mark here inside of Bitcoin. So what I would watch for if you're trying to play the long side on Bitcoin is, do these hammer candles result in any upward lift? And if so, can we close a daily bar above $23,850 per coin? If that is the case, we can get a strong close above. Then we're looking for lift through this thin structure from the breakdown to backtest the breakdown level, which is $28,650 per coin. So that's the upside and the downside here inside of Bitcoin. Hopefully you'll certainly appreciate the fact that we want to bear in mind that that weekly chart is still clearly in bear territory. And one last thing we'll do to reaffirm that is we'll take out the Fibonacci's from two places. Number one is this high all the way down to the low. I mean, it's quite obvious that we're going to be underneath that 38.2. That goes without saying. But if we go ahead and look even from this local high right here, and we drop it down to the lows, you'll notice we're just flirting with a 38.2. So unless we can make a move above the 61.8, there's still possibility that this is just bear flag consolidation underneath the 38.2, underneath the 50% fib, which again is just, as I've stated, bearish, right? So be mindful of those longer time frame trends that are still in place here on the Bitcoin daily time frame. Enough of that. Let's go, or excuse me, weekly time frame. But now we'll go down to the daily, and we will, actually, the last thing I'll leave you with, I know I'm kind of all over the place here, but bear with me, would just be that support trend line. If we remain above that, I don't know why it's blue today. I actually don't like that. That's hideous. If we just quickly change that to white, that would be better. That contrasts nicely on the black background. Good. I'll make some adjustments later, but you get the gist. As long as we're above that, I would say fine, neutral to bullish here in Bitcoin in the short term on the daily time frame, and this would be the breakout to pay attention to. If it's bearish, we already talked about the neckline breakdown for that rotation here. Well, let's continue along. Ethereum is up next on the chopping block. A little bit more relative strength. You'll notice that there is not really the possibility or a clear outcome of a double top here. We clearly have a higher high already, and it does look likely that a higher low will be put into play with this hammer candle that's printing as we speak. The quote-unquote neckline equivalent that we just discussed in Bitcoin would have been this pullback right here. And also notice how that, from a relative strength perspective, is still far above this set of consolidation from back here, that prior balance area. So Ethereum is definitely the area where there is relative strength. We discussed this in last week's Monday update, and we're actually, if we were to flip to a weekly time frame chart, we're coming into the neutralization zone, which is over 1692 up towards 1920. So back to the daily, I'll just illustrate that via this. You'll notice that's where the breakdown really came from. Support, 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 breakdown comes. That's what we've back tested essentially. It's not the end of the world that we're pulling back off that. That is the expected reaction. But if we can get that next higher high and some acceptance here, that would start to neutralize that weekly trend that we were just looking at. Again, a better bullish step than what we just saw in the Bitcoin weekly time frame. So definitely Ethereum is feeling the love much more so than the BTC chart. If we go ahead and throw on a trend line, you could watch this. It is fairly steep. I wouldn't, make this an end-all be-all sort of analysis point here, but if we're above, optimally bullish. If we're sideways through it, not the end of the world as long as we're above 1483 for a higher low. If we do dribble down underneath, it starts to just neutralize and build out a balance area here. I would say patience is the play. Wait for a break of the box one way or another for the next leg to be kicked off in Ethereum. But as of right now, again, this is just kind of where the relative strength is. On upside, we talked about targets being 1920. Prior support, 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 breakdown, then resistance, right? And then after that, if I had to call out one more, I'm not forecasting a rally this week that would get here, but just to give you a level, 2150 is up next after that. Binance Coin, what's going on here? Good relative strength as well above a support trend line. Also, look at how picture perfect this structure is, right? We have a ascending triangle. We have a breakout level. We break, retest, hold for support to the tick, basically, rally, pullback, and the higher low looks very likely it will be above this prior set of highs in here at 268. Because of that, perfect break and retest, trend is clearly back to the upside. We're looking for continuation on the upside, right? So 311 is your next target, and after that, let's grab one more for you. I would definitely start looking at 328.10. 328.10 is coming from these failed attempts on breakouts here and one more attempt there. Notice that again, it did set a lower high. That would be the first area that we really need to clear before we can truly move back towards this historic level, which is 357. So there are some hurdles to the upside, but the trend here, just like Ethereum, is much cleaner than what we've seen in Bitcoin so far, with the structure just being quite literally textbook here inside of Binance Coin. What would make me bearish on this chart would be a deeper pullback to here, a lower high, and lo and behold, what did I just draw, right? Technically a head and shoulders, shoulder one, head, shoulder two, neckline would be a breach of 243 for the downside rotation to the bottom end of this range right here. Doesn't strike me as likely as of right now. I'm just presenting a possible bearish outcome if we were to see a breach of the trend line and a lower high be produced. Again, the chart implications with these indecision dojis here on the pullback strikes me as bull flag, strikes me as breakout and continuation higher is more likely than the head and shoulders pattern we just described. Next up is the no touch coin, the one that is just absolutely boring, doing nothing. Stuck in this range amid a number of coins that are actually doing quite well and perking up. One thing I will say about this is that we do have a support trend line as such. As long as we're above it, technically we're building out an ascending triangle like this. The breakout is over 54 cents to rotate into 65 cents. It is worth trading, especially because we're talking about pretty large percentage moves on something so cheaply priced. But just be mindful, excuse me about the cough, if we breach the support trend line, it's rotating back down to the lows, and you do not want to be, again, holding that because the percentage loss will be, just as large as the potential percentage gain on the upside here, if not larger. So use a tight stop if you do decide to trade Cardano, on this breakout here over 54 cents. If the trend line breaks and we never get a breakout to the upside, again, the implication would just be back to the bottom end of the range. 44 cents is a really dangerous area to be fishing for longs. Now that we've attempted it so many times, it's just a massive, we call things flush points usually, but I would start to classify this as a cliff, right? If you fall off of this, look out below. It's, you're not going to find any support anytime soon underneath 44 cents. Excuse me again, apologies for the cough. You guys know the deal. It's sort of been a week of recovery, if you will. But Solana. What is going on in Solana? Much more of that double top look like we just discussed in Bitcoin. There's sort of your M, your double top, whatever you want to call it, it's fine. Breaching this level, or at this point, really just the trend line, a breach of 37.50 opens up the door for the equal lows here to the prior double bottom, right? You had double bottom W pattern, break the neckline and we're higher. Now it could be the opposite. There's your double top, break the neckline and it's lower, retarget the double bottom area, which was 31. Underneath that, if that were to breach as well, so if we were to do something like this, lower lower high and then reattempt, obviously the door is open as well to 26. For now, any consolidation up here is exactly neutral, not really doing anything, going sideways in this range. And just like we talked about in Binance Coin, if we just maybe it was Ethereum. If we just middle out up here, it's patience. It's either long next up and over 48 or short next down and out underneath 37.72. As of right now with the double top, it's just not as strong as what we saw in Binance and Ethereum. So if you're looking for longs, I'd probably look to these two guys before you went to Solana. Upside targets, if we were to breach the double top and get a big breakout here, would be over 48. You can see that there's some room to run until that set of highs there. Let's throw those back on the chart. We're looking at roughly 52 on your upside there. So about 4 points worth of range on the upside. Last but not least, we've got MATIC USD. Pretty decent relative strength. Obviously, this breakout is much more aggressive than what we've seen on some other charts, but the new high that was set here, not as convincing as what we saw in Ethereum and Binance Coin. Instead, much more double top-esque like what we saw, in Solana and Bitcoin. So just be mindful of that. Hammer candle is trying to form as we're speaking. So if we get some upward lift, fine. We do technically still have low, higher, low, higher, low, higher, low, higher, low. So that would preserve the uptrend, but it's time for the bulls to get back in gear here and give us another higher high to continue the trend and not just neutralize out here with sort of a congestion pattern. Oops, we want this tool here. Ideally, if it does congest, we want it to turn into a flag pattern here, some sort of ascending wedge triangle, and then boom, we get a break. If that doesn't happen, it's really just more sideways, it does open up the possibilities for shorts back down underneath 74 cents, which of course, underneath that would also be a break of the trend line, right? If you can just imagine that doing something like this, you can see there's quite a ways to fall until we get to like 60 cents. And again, on something priced in this manner, sub $1, you're talking about fairly large percentage moves. So you should be very mindful of that. If you're looking to initiate longs around this 74-cent area, make sure you're using a tight stop. You don't want to get caught up in a situation where all of a sudden you're looking around and you've got a 25% loss, 30% loss. It turns into a 40% loss. It gets nasty, and it gets nasty quick when we're dealing with things priced around these sort of price points. So that's what I've got for you on the crypto update. We will do it on Friday. We'll be around this Friday, so it will come out as scheduled. No more music festivals for me, at least, into the remainder of the summer. They were great. I appreciate all of your sort of tolerance. Number one, of the videos coming out slightly off schedule, and number two, of the sort of asthma cough that has been a result of unfortunately, overuse of voice. Nonetheless, thanks for tuning in. I wish you all a great trading week.